All right, fucking finally. Let's see if that works. Jesus Christ. Let's see if that works. Can you guys hear me? Can you guys hear me? Let's see if this works. It should work. If it, I have no clue what happened. I apologize. YouTube would not let me stream the thing. All right, so let's go straight to CNBC real quick and see what happened. Come on. I have no clue why it iced me out like that. All right, let's see. All right, so Fed leaves target interest rates unchanged, as we said. Now, the most important thing is going to be what happens with the dot plot. So, as I said in my Discord update this morning, I said that the Fed dot plot, which tells us whether the Fed members or the Fed officials see a higher terminal rate for the following quarter. So, for Q4 of 2023 and for 2024, we want to see if the terminal rate, if the Fed officials signal a terminal rate, because the pause itself was expected. As I said, we're going to get Jerome Powell talking in 19 minutes. However, here it says markets await key dot plot Powell press conference with no interest rate hike expected. But I could have sworn in the Fed statement, it says, let's see. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate. We all knew that would happen. Let's see if there is a change to the target. In support of these goals, the committee decided to maintain the target range for the federal funds rate. We already knew that. They left the rate unchanged. So we're just waiting on the dot plot. So the dot plot is going to literally tell us whether the Fed sees a higher terminal rate or not. Mic not working? Did we miss the trade? What trade? Jerome Powell hasn't talked yet, but we did send out trades in the Discord this morning. One was sent by one of our analysts. It was stopped out, but there was only really one main trade this morning, and it was on, let me go to the to TradingView. It was on the NASDAQ futures. And it was this short right here at around 10:30 a.m. Eastern time. But this trade, no, you're not going to see this trade coming unless you just front ran the short, right? You're not going to see this trade coming unless you just guessed short. But when Powell starts talking, I think that this will reverse higher and continue to bounce around all day. So the initial move, remember, is not the only move. But some of us took a scalp long from here at 11:30 to VWAP. But in terms of this move, no, this is not a guessable move unless it's not a predictable move unless you just guessed and front ran a short, for instance, right? All right, let me see. Let me pop out the chat real quick, and then let us read some more into what went on with the Fed statement. We're obviously awaiting Jerome Powell at 2:30 p.m. Eastern time. So in 19 minutes from now, we're going to be listening to Jerome Powell. But as expected, the Fed leaves the interest rates unchanged. We don't know whether they're going to hike on November or not. North Shore Girl, appreciate you for donating to St. Jude's. Thank you so much. Papa Z, you look like Stallone. Maybe you didn't pay your bill. No, I was too busy paying your mom's bill, Simon. Sorry. YouTube hating. Yeah, YouTube was hating, honestly. I'm not sure what that's never happened to me. Or I can't remember the last time that happened to me live streaming. Regine, what's going on? Conscious Investing. Seba, Amazon, what's going on? Olga, you missed life? Internet not so great in Palermo? No, it's not that great, honestly. All right. They left it at 5.6 over the year 2023, but it went up from 4.6 to 5.1 in 2024. What are you talking about, Bryce Richards? All right, let's look for the dot plot. 1 second. Fed dot plot. All right, here we go. Fed's dot plot points to one more rate increase. So the Federal Reserve officials still see one more rate increase hike before the end of this year. Medium forecast released on Wednesday. By the way, if you guys watched my video from yesterday, I was saying that regardless, I think I'm leaning towards either a sell the news event or even worse, more of a downtrend because of the fact that that the Fed was seeking higher for longer, right? Like I didn't see a scenario really in which the market rallied from here, right? The only thing is if the Fed announced that they were no longer going to hike, or the dot plot showed that they're not going to do one more rate increase. But there's no way in the fight against inflation that Jerome Powell, even if he's not planning on raising rates one more time, there's no way that Jerome Powell can actually say that. So they're going to try to appear hawkish while pausing. And this could very well be the last rate increase, right? Like we've seen this from the Fed before. They have to talk tough, but this could very well be the last increase. So the central bank's latest summary of economic projections shows the median projection for where the federal funds rate will be at the end of this year is 5.6%, matching the projection from June. That suggests most officials on the bank's policy committee continue to see the need for one more quarter-point interest rate increase at the November or December meetings. The November meeting is November 1st, keep in mind. The so-called dot plot includes forecasts put forward by each member of the committee based on their views. So yeah, it looks like they are projecting one more rate hike. Whether that happens or not is anybody's guess. But that is why, if you take a look at bonds, for instance, bonds are not mooning at the moment, because if this was the last rate hike, or if it was expected that this was the last rate hike, you would see the bond yields actually dropping, and you'd see bonds mooning. That is not the case right now. So I actually think that there is likely a new low that's going to be had for the 2-year futures. I think we're going to get to that June 2009 low on the 2-year futures, and the 10-year, I think, will get to that 2011 low at least. As I said in my market update this morning on the Discord, I said that I do think we are going to hit, on the SPY at least, we're going to eventually hit that 430 level, which would be the neckline of this head and shoulders, but it would also be the support resistance flip from the level that we saw in August 2022. It was resistance. We finally broke out of that in June 2023, and we are now seeing it as support. So I'm expecting at least 430 on the SPY. I continue to hold covered calls on the SPY. We did have a SPY credit call spread that expired for 100% last Friday. Some people actually made more than 100% because they got assigned on the short call. There was a dividend X date on last Friday. And so they were able to buy back those shares to close out their position for a lot less than they sold it for. So I will likely open up more hedges. I am looking intently at selling more cash secured puts. I'm waiting on Tesla. Tesla is actually mooning today, which is crazy. But we closed out our cash secured puts for over 80%, looking to sell a new batch of that. So if you want to know what moves I'm making in the market, when I'm hedging, how I'm shorting the market, as well as selling cash secured puts, as well as selling calls, etc. We currently have a credit call spread on Apple that's open, and Apple is down 1.1% today. So currently near break even on that, waiting for more of a breakdown for Apple. But make sure you click the link in the description. Now, I want you guys to use the code FOMC. Make sure you click the second link in the description if you want to join the monthly. Use the code FOMC. We are also relaunching the Mastermind on October 3rd. Mastermind 2.0 is coming. It's going to be 4 weeks, 2 classes a week. We're going to go over options trading, options selling strategies. We're going to go over futures trading, how to trade futures, how to do technical analysis, and how to trade my exact strategy. That class is going to be taught by me. It's going to start October 2nd. That is the first link in the description, so make sure you click on that. All right. Let's see. Fall of an Empire, says Torriger Pepe. Cool. Got them. Where you been at, man? Who are you talking to? I don't know. Mike is very muffled. Is it? I don't know. TLDR, what happened? Rewind the tape, Kyle. Ashanti says, I bet she's being treated well with Z's money. Remember, thumbs up for TTT's work. Yeah, I don't know what's wrong with Trorig or Pepe. How about you just don't pay attention to that fool? Nice returns yesterday on Tesla's call. Oh, you bought a Tesla call? Nice. I didn't buy a Tesla call yesterday, Divvy. Can you create your own channel in the Discord? I seem to keep missing the plays you post because it gets lost. You mean in the chat? Yeah, I'm not going to create my own chat. But in terms of the alerts, yeah, the alerts are there. Please, can you explain your short from earlier today? Oh, you're talking about on NQ? Yeah, sure. If it will help you guys, I will go over it. So here's what I would actually, you know what? I want to pull up my displays. I just want to add this display real quick. All right. And all right, cool. So earlier it was basically the short that I was talking about, was, let me try and remember. It was basically the fact that we weren't done taking liquidity, and I think it was, oh yeah. So we had taken internal liquidity. We broke below the open right here at around 10:30, and we started retracing back up into this fair value gap. So my reasoning for the short was that I thought that the draw on liquidity would be lower, and I thought that it would be at the Asia low. So my target for that short was basically a retracement into this fair value gap, taking it short from here, and then targeting the Asia low, which was, where was it? Asia low on NQ was around 15,343. So the trade was something like this. This was at 15,343. The trade was something like this. That was the reason that I took a short, was because you want to figure out where your draw on liquidity is. And we had this major level, which was the Asia low. And I didn't think that this right here, which was basically relative equal lows from another level during the Asian session on NQ, when you see relative equal lows, they are likely to get taken out, especially if you have a reason to believe there's a lower draw on liquidity. So that's it. And by the way, all this stuff is explained will be explained in the Mastermind 2.0. Blue balls, baby. Yeah, right. Love your content. Keep watching. Appreciate you, man. Thank you so much. Thanks for doing these live events. Yeah, no worries. Jerome Powell in 9 minutes. Guys, hit that thumbs up. so that other people find the stream, and so that we can continue to be incentivized to do these streams and provide you with free trades and free analysis. Hit that thumbs up. All right. 1,400 watching. That's awesome. Yeah, guys, hit that like. Hit that like button. Woohoo mastermind. Yeah, for sure. Z chiming in from the beautiful island of Cyprus. Welcome to the Mediterranean. That's awesome, man. That is really awesome. Yeah, it's really hot this time of year. All right, let's check on the S&P 500. We're only down 0.1% on the S&P 500. To me, it looks like this might be we do have a further draw on liquidity from a level that we hit during yesterday lunchtime on the S&P 500. Although we took out this level here. So right now, what you want to see, and I'm not going to take a trade right now before Jerome Powell starts talking, because what you want to see is you're trying to see if this right here, let me put this mic down 1 second. All right. So what you're trying to see is you want to see if this level right here, is the liquidity draw, right? And if it is the liquidity draw, then that means you want to start looking for longs. But obviously, two things. You have Jerome Powell talking in 7 minutes, and you have this fair value gap here, which could smack down price into this previous liquidity level. So for me, this is a no trade zone besides, whatever trade we went over this morning. To me, this is a no trade zone. So not looking to enter trades here just yet. All right. Now, I do have this SPY cover call here. I have the 460 cover call on the SPY against my SPY shares, currently up 65%. These expire on October 20th, so a month from today, and I already collected more than half for this SPY cover call. So I will likely leave it open for the rest of September and collect more theta. As long as it's under 460, I should be able to collect most of that premium. But like a price is going to have this fair value gap here, which can reject price into this lower area of liquidity, right? It all depends on what Jerome Powell says. Now, I do think I know what Jerome Powell is going to say. I think Jerome Powell is going to say, we left the rate unchanged. They're going to ask him why. He's likely going to say that it's because core CPI has come in line year over year, and that any further rate hikes will be data dependent, right? So that's likely what he's going to say. Guys, make sure that you hit that thumbs up. There's only 326 likes. There's 1,200 of you watching. Make sure you hit that thumbs up, guys. Hit that thumbs up, especially if you want me to give you a free trade. All right, there's a pivot point also there. Yeah, I don't really look at pivot points, but do you trade Goldsy? Not really. How do I get into your program? Second link in the description. Make sure you use the word FOMC. It is going to, your screen is blurry. Really? All right. Mic is not good. How about now? Fuck me. Ay, 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 ay. Let me know. Let me know if it's good because I just changed my internet settings. All right. He said everything is working good. People have trash internet. Well, apparently the internet that I have sucks here as well. So I mean, I don't know why YouTube wouldn't let me connect, but apologies for that. Apologies for that. Once I'm back home, it obviously I can't wait honestly to get back home and have a perfect connection to start live streaming stuff for you guys. That's one of the downfalls of traveling is like you can never tell what the internet connection is going to look like. So, all right. All right, so we're climbing into this fair value gap here. Oh, let's see. Jerome Powell is damn near going to talk right now.
We know that inflation numbers are a bit better than the last time he spoke. The growth numbers are a bit stronger the way he spoke. Which does he worry about more? My gut sense is that he's going to basically ratify the view that unless the numbers go in a very adverse direction, they're done. Secondly, I want to see whether he associates himself with that very hawkish view on rates next year, or whether he disassociates himself
Mr. Powell. Thank you, Greg.
Focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, we are in a position to proceed carefully in determining the extent of additional policy firming that may be appropriate. Our decisions will be based on our ongoing assessments of the incoming data and the evolving outlook and risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. And so far this year, growth in real GDP has come in above expectations. Recent readings on consumer spending have been particularly robust. Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our Summary of Economic Projections, or SEP, committee participants revised up their assessments of real GDP growth, with the median for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 150,000 jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August, but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises from 3.8% at the end of this year to 4.1% over the next 2 years. Inflation remains well above our longer run goal of 2%. Based on the Consumer Price Index, or CPI, and other data, we estimate that total PCE prices rose 3.4% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 3.9%. Inflation has moderated somewhat since the middle of last year,
right here,
and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2%.
I hope you guys listened to me earlier with that fair value gap. We're up 360.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people.
I'm going to move my stop to break even.
My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses. In light of how far we have come in tightening policy, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of 2025. Compared with our June Summary of Economic Projections, the median projection is unrevised for the end of this year, but has moved up by 0.5 percentage point at the end of the next 2 years. These projections, of course, are not a committee's decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. What makes the committee inclined to think that the Fed funds rate at this level is not yet sufficiently restrictive, especially when officials are forecasting a slightly more benign inflation outlook for this year? There's noted uncertainty about policy lags. Headwinds have emerged from the looming government shutdown, the end of federal childcare funding, resumption of student debt payments, things of that nature.
So I guess I would characterize the situation a little bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy that's sufficiently restrictive to bring down inflation to 2% over time. We said that. But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking. If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not that it will be appropriate for us to raise rates one more time in the 2 remaining meetings this year. Others believe that we have already reached that. So it's something where we're not making a decision by deciding to about that question by deciding to just maintain the rate and await further data.
So right now, it's still an open question about sufficiently restrictive. You're not saying today that we've reached this level.
We're not saying, yeah, no. Clearly, what we decided to do is maintain the policy rate and await further data. We want to see convincing evidence, really, that we have reached the appropriate level
here.
And you know, we've
currently
seen
up
progress
almost $600. I keep scalping this level, this fair value gap here.
You know, we need to see more progress before we'll be willing to reach that conclusion.
Currently up 200.
And just on the 2024 projections, what's behind that shallower path for interest rate cuts and the need for real rates to be 50 basis points higher?
Right. So I would say it this way. First of all, real interest rates are positive now. They're meaningfully positive. And that's a good thing. We need policy to be restrictive so that we can get inflation down to target, okay? And we're going to need that to remain to be the case for some time. So I think, remember that of course, the SEP is not a plan that is negotiated or discussed really as a plan. It's accumulation, really, and what you see are the medians. It's accumulation of individual forecasts from 19 people, and then what you're seeing are the medians. So I wouldn't want to, bestow upon it the idea that it's really a plan. But what it reflects, though, is that economic activity has been stronger than we expected, stronger than I think everyone expected. And so what you're seeing is this is what people believe as of now will be appropriate to achieve what we're looking to achieve, which is progress toward our inflation goal, as you see in the SEP.
Thanks. Let's go to Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions.
She asked a good question.
How would you characterize the debate around another hike or holding steady? Is it discussion around lag times, fear of too much slowing, too little slowing? Could you walk us through what this disagreement was about at the meeting?
Yeah, so the proposal at the meeting was to maintain our current policy stance. And I think there was obviously unanimous support for that. But this, of course, is an SEP meeting, and so people write down what they think. And you have some, you saw, I think 7 wrote down no hike at this meeting, or between now and the end of the year, and I think 12 wrote down another single hike in one of the next 2 meetings that we have between the end of the year. So it wasn't like we were arguing over that. People just stating their positions. And really what people are saying is, let's see how the data come in. You know, we want to see, you know what we want to see. We want to see that these good inflation readings that we've been seeing for the last 3 months, we want to see that it's more than just 3 months, right? We want to see, you know, the labor market report that we received, the last one that we received, was a good example of what we do want to see. It was a combination of across a broad range of indicators, continuing rebalancing of the labor market. So those are the 2 things. Those are our 2 mandate variables, and that's the progress that we want to see. But I think people, they want to be convinced, you know, they want to be careful not to jump to a conclusion really one way or the other, but just be convinced that the data, you know, support that conclusion. And that's why, given how far we've come and how quickly we've come, we're actually in a position to be able to proceed carefully as we assess the incoming data and the evolving outlooks and risks and make these decisions meeting by meeting.
And in your view, what would, I know nothing has been decided yet, but what would one more hike at the end of the year do to the economy or to inflation? And on the other side, what would no hike do, if you could sort of game that out for us?
So, you know, you can make the argument that one hike one way or the other won't matter, but for us, we're trying, obviously as a group, it's a pretty tight cluster of where we think that policy stance might be, but we're always going to be learning from data. You know, we've learned all through the course of the last year that actually we needed to go further than we had thought. If you go back a year and what we wrote down, it's actually gotten higher and higher. So we don't really know and that's why, again, we're in a position to proceed carefully at this point. A year ago, we proceeded pretty quickly to get rates up. Now we're fairly close, we think, to where we need to get. It's just a question of reaching the right stance. I wouldn't attribute huge importance to one hike in macroeconomic terms. Nonetheless, you know, we need to get to a place where we're confident that we have a stance that will bring inflation down to 2% over time. That's what we need to get to, and we've been moving toward it. As we've gotten closer to it, we've slowed the pace at which we've moved. I think that was appropriate. And now that we're getting closer, we have the ability to proceed carefully.
Thanks. Let's go to Steve.
Steve Leisman, CNBC. Mr. Chairman, I want to return to Colby's
I like his questions
here.
too.
What is it saying about the committee's view of the inflation dynamic in the economy that you achieve the same forecast inflation rate for next year, but need another 0.5 point of the funds rate on it? Does it tell us that the committee believes inflation to be more persistent, requires more medicine effectively? And I guess a related question is, if you're going to project a funds rate above the longer run rate for 4 years in a row, at what point do we start to think, hey, maybe the longer rate or the neutral rate is actually higher? Thank you.
So I guess I would point more to, rather than pointing to a sense of inflation having become more persistent, I wouldn't think that's not, we've seen inflation be more persistent over the course of the past year, but I wouldn't say that's something that's appeared in the recent data. It's more about stronger economic activity, I would say. So if I had to attribute one thing, again, we're picking medians here and trying to attribute one explanation, but I think broadly, stronger economic activity means rates, we have to do more with rates, and that's what that meaning is telling you. In terms of what the neutral rate can be, we know it by its works. We only know it by its works, really. We can't the models and that we use, ultimately you only know when you get there, and by the way the economy reacts. And again, that's another reason why we're moving carefully now, because there are lags here. So it may of course be that the neutral rate has risen. You do see people. You don't see the median moving, but you do see people raising their estimates of the
I'm up
neutral
now
rate.
262, almost up $700.
Is higher than
So I just keep scalping this
the
right
longer
here.
run rate. Remember, what we write down in the SEP is the longer
Currently
run
up
rate.
762.50 on the day, because I keep scalping this fair value gap.
That the neutral
now,
rate
as
at
I
this
said
moment
before,
is higher than that, and that's part of the explanation.
Sorry, we were talking over one another, but I keep scalping this level here, this fair value gap that I told you guys about before. I noticed that a few of you were saying that I didn't call out a trade. No, I'm not saying, I'm not calling out a specific trade while he's talking. Obviously, he's talking. We're listening to him. So I'm just scalping the level that I told you we would see resistance at. Now, here, let me go to TradingView. This is the same level, right? That on Thinkorswim, this is the same level that I called out. So I was saying that we will likely see a rejection off of this fair value gap, and I've been scalping inside this fair value gap. Now, whether we get to this ultimate low here at 44.62 on the S&P 500, I don't know. Right now, I'm just scalping, and I'm making a good amount of money off of it, and it's pretty easy to spot these fair value gaps and scalp them. So right now, I'm up 762.50 on the day, and I did this 5 times, as you can see here. This will show you 5 by 5, meaning I opened 5 and I closed 5, and this was my total so far. So I'm looking to get a broader move, but while he's talking, since price is getting rejected in this fair value gap, it's pretty easy for me to scalp here. I don't know what the broader move is, but this is a good day's work. Honestly, is especially during FOMC when most people are scared to trade. So like I said, if you want to learn how to do this, make sure that you either join us on the monthly, use the code FOMC, you get 50% off the first 3 months. That code will expire after this. So make sure it's a second link in the description. And if you want to join the mastermind where I will teach you my exact strategy for how the hell I found this, make sure that you click that first link in the description. Get on the mastermind waitlist. The higher you are on the waitlist, the more priority you will have in terms of being accepted into the mastermind. So that is all I was doing. So someone asked me calls or puts. These aren't calls or puts. These are futures. Now you could try to mimic this by buying SPY puts, but I find futures to be a lot more precise when you're scalping because options are subject to a lot of Greeks, etc. But you can see here, as I said, we're going to likely get rejected off of this fair value gap. Now, whether we get to this level, I don't know. Hopefully, we get some indication, some retracement to where I will then take another short, hopefully for a broad-based short, especially now that I'm up almost $800 on the day. I have a little bit to gamble with, and I will likely take a few more contracts rejecting. If we can get a move up here and then a rejection down to that level that I was talking about, that would be ideal. But yeah. Alonzo says, "Yep, you did say that. Yeah, for sure. Conscious investing is also scalping that FVG. I noticed his comment. Now that we're approaching low of the day, are you thinking it'll rebound back to that FVG? Well, not on FOMC days. Like it's very likely that we don't even get this rejection, this retracement for the rejection. A lot of times you will just get that straight dump, right? But I am targeting this level, especially if this right here stays at around what we call relative equal lows. I think that those will get taken out. So hopefully we can get a trade off of here, right? Even if it's back down to that level, by the way. So even if you take something like this, right, you're still dealing in a 2-to-1 trade right here. So Yeah. What I love is that a lot of people avoid playing FOMC. You guys have been with me, all of you day ones, all of you lovely family that have been with me since the beginning. You know that we have a very high success rate trading these events. So I find no reason to stay out. As long as I know how to scalp and manage my risk, I like staying in. I like actually trading the volatility here. So easy 800 on the day. 800 on the day never hurt nobody. That replaces a full-time job if you're able to do that on a daily basis. Now, if you notice, I do go lighter in position size during FOMC, something that I also suggest you do. Obviously, do what you want, but I do go lighter in position size. So whereas normally I might take 5 to 10 contracts at one time, I'm only trading one contract and scalping it within that fair value gap. So if we get to this level here, I will likely, let me see, 44.89 to 44.94. That is what, a 5-point stop limit. So each contract, if the stop limit hits, will be minus 250. Should I just take my money and find a better trade later in the day, or should I go in for that trade? Let me see if I go to the lower time frames, what happens. Beautiful response down there. I'm out now. Yeah, awesome. Easy $400 for me. Awesome nail. Awesome. No. Keith W says dumpy dumpy. Election year. Time to pimp. Preetham says you were spot on, Z. Yeah, appreciate it. Those hats are dope. These ones, yeah, unfortunately, we don't have these anymore. This is an old hat from, God, I want to say 4 years ago. We do have hats, but I do love this hat. Dude, are you selling the gray hats? Are they on the site? I don't even know what we sell. Honestly, I'm horrible at marketing merchandise. Horrible at it. All right. But yeah, I mean, hopefully you guys caught that. Those of you that actually know how to spot fair value gaps. Got out on the closed lows, 2K up here, off for the next week. Hell yeah, Blue Chip Joe, amazing. Are we going further below to 4,400? I'm guessing that we do. I'm guessing that we break these relative equal lows here. And I'm guessing that we go down to that level, that 44.62 level on ES. It's not the same as SPX or SPY, obviously. So make sure that you are looking at ES and doing the conversion yourself. But for those of you that didn't catch it, I mean, don't fret. Like this isn't the only big day in the market. We're going to get a lot of other big days. So that's the beautiful thing about the market, and that's one of the things that has to help. One of the things that you have to focus on when it comes to trading psychology is that this idea that there will never be another big day. That's bullshit. There will always be big days, and there will always be things to catch. So you don't have to chase trades, and if you missed a trade, don't get yourself down. Honestly. But yeah, if you guys want to learn how to do this, I suggest that you guys take advantage of that 50% off for 3 months and join the monthly. And for those of you that are even more committed, put your name on the damn wait list for Mastermind 2.0 coming October 3rd. Make sure you do that. Oh, use the code FOMC on WAP. It's the second link in the description. Use the code FOMC to get your 50% off. Made $1,000, done for the rest of the week. That's awesome. Dean, I just lost 400. How did you lose 400, Dean? Walk me through exactly what you did. How did you lose money on that? Did you try to long it? Or you were probably just playing options? Sold the highs, thanks Z. Yes, that's awesome. Conscious investing made money. Not Jordan L. Sid's vlog made money. Blue Chip Joe made money. Nal made money. Good job, guys. VIX still low, bad for option sellers. That's not true. Baby cutie. That's not true. I think they raise more than once. No, I think they just do once, man. I think they do once and they keep them up, and then they'll start cutting as unemployment starts going up next year. Carlos Peralta made $900. Damn, Carlos, amazing, bro. Picked up some cash on your encouragement to scalp. Awesome, Scotty G. Yes, I bought a few calls on the SPY, says Dean. Ah, I see. Karen B says made 200. Wow, love to see it. Love to see it. Deleon Girl 72. Hey, what's going on? She's in the Discord. Made 200. Yeah, it's hard for me to try to alert exact scalps in the Discord. That's why I like doing it live is really the only way. Walter Ramos, no trade yet. Don't worry, Walter. Don't worry about it. You got this, bro. And guys, I apologize for the shitty stream. I apologize for the technical difficulties I had earlier. I'm not in my home studio. Obviously, I'm traveling. Some places the internet's better than others. Here in the hills of Palermo, the internet apparently sucks. Although it was showing me better stats earlier when I was testing it out. So apologies for that, and I'm sorry. But I promise you guys much better streams when I get back to the US. I promise you. So apologies for that. All right. Any questions that you guys have? Let's see what's going on CMC. What are they talking about?
Effects. It could affect. We've looked back at history. It could affect. Economic output, hiring, and inflation. But that's really going to depend on how broad it is and how long it's sustained for. And then it also depends on how quickly production can make up. It can affect over time. A sustained period of higher energy prices can affect consumer expectations about inflation. We tend to look through short-term volatility and look at core inflation. But so the question is, how long are higher prices sustained? We have to take those macroeconomic effects into account as well. Those are some.
I don't even know anymore. This is so frustrating, guys. I'm so sorry. This is so fucking frustrating. Guys, I'm sorry. This is so frustrating.
So.
Let's go to Chris.
Hi, thank you. Chris Rugaber at Associated Press. When you look at the disinflation that has taken place so far, do you see it mostly as a result of what some economists are calling the low-hanging fruit, such as the unwinding of supply chain snarls and other pandemic disruptions, or is it more a broad disinflationary trend? that involves most goods and services across the economy. Thank you.
So if I understood your question, I would say it this way. I think we knew from before when we lifted off, but certainly by the time we knew that bringing inflation back down was going to take, as I call it, the unwinding of these distortions to both supply and demand that happened because of the pandemic and the response. So that unwinding was going to be important. In addition, monetary policy was going to help. It was going to help supply side heal by cooling demand off, and just in general, better aligning supply with demand. So those two forces were always going to be important. I think it's very hard to pull them apart. They work together. I do think both of them are at work now, and I think they're at work in a way that shows you the progress that we are seeing.
Michael McKee from Bloomberg Television and Radio. In June, you forecast a 5.6% year-end median Fed funds rate, and since then, you've more than doubled your growth forecast. You lowered your unemployment forecast significantly. So what would justify that last move? Because the median forecast is for lower inflation. And given all the known unknowns that you face, how much confidence do you have, can investors have, or the American people have in your forecasts?
Well, forecasts are highly uncertain. Forecasting is very difficult. Forecasters are a humble lot with much to be humble about. But to get to your question, though, what's happened is growth has come in stronger, right? Stronger than expected, and that's required higher rates. Unemployment, you also see that the ultimate unemployment rate is not as high, but that's really because of what we've been seeing in the labor market. We've seen more and more progress in the labor market without seeing significantly higher unemployment. So we're continuing that trend. In terms of inflation, you are seeing the last three readings are very, very good readings. It's only three readings. We were well aware that we need to see more than three readings. But if you look at June, July, and August, you're looking at really significant declines in core inflation, largely in the goods sector, also to some extent in housing services, and just a little in non-housing services. Those are the three buckets. Headline inflation, of course, has come way down, largely due to lower energy prices, some of which is now reversing. So I think people should know that economic forecasting is very difficult, and these are highly uncertain forecasts. But these are our forecasts. We have very high quality people working on these forecasts, and I think they stand up well against other forecasters. But just the nature of the business is the economy is very difficult to forecast.
Given the forecast that you have, what justified not moving today, and what could justify moving in the future if you think inflation is coming down? In other words, why did you leave that extra dot in?
Well, I think we have come very far, very fast in the rate increases that we've made. And I think it was important at the beginning that we moved quickly, and we did. And I think as we get closer to the rate that we think, the stance of monetary policy that we think is appropriate to bring inflation down to 2% over time, the risks become more two-sided. And the risk of over-tightening and the risk of under-tightening becomes more equal. And I think the natural common sense thing to do is as you approach that, you move a little more slowly as you get closer to it. And that's what we're doing. So we're taking advantage of the fact that we have moved quickly to move a little more carefully now as we sort of find our way to the right level of restriction that we need to get inflation back down to 2%.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With your focus on year-over-year PCE, isn't it true that base effects are huge, and that by the time you meet in November, that it's more likely that you'll have a low PCE number that would make you feel more comfortable? And secondly, how would the lack of key indicators like CPI, the jobs report, impact your approach in upcoming meetings if we were to have a government shutdown? Thank you.
Yeah, I missed the first question. What was what factors?
The base factors.
Base factors. Okay. So on that, we're looking at just monthly, right? You can look at just monthly readings and see what the increase was from the prior month. So you're right. When you go back 3, 6, and 12 months, you get base factors, but we can adjust for that. In terms of not getting data, again, we don't comment on government shutdowns. It's possible if there is a government shutdown and it lasts through the next meeting, then it's possible we wouldn't be getting some of the data that we would ordinarily get, and we would just have to deal with that. And
all right, right now he's just babbling. There isn't really anything of substance to discuss here, in my view. I don't think I think the bulk of what he wants to say is already said. And I think that we will likely take out on S&P 500. We have taken out those equal lows. This right now, you want to see whether this right here is liquidity or not. Same as before, right? And I will be likely, I don't think we'll get there, but I would love, actually, you know what? In this case, we will likely have to take it off of the 1 minute. This right here. Wait a minute. If we can get up, fuck, that was the 44.78 on the S&P. That was the entry to take this short. This is going lower. Let's see. It would be a gift if we can get to yesterday's lunch low at 44.62. Let's see. I think the bulk of what Jerome Powell has to say is already said. And there's a chance this goes lower. Although there's also a chance this is a liquidity grab below these equal lows. Let's see. But the S&P is only down 0.2%. So I could scalp this and take profit because it's up $75. That's not enough for me, though. I'm already up 800 on the day. Over 800, so I'm okay letting this play out here. And I would likely set my stop right above here. Ooh, dump it, dump it, dump it. Let's go. Up 100. We just need this big dump right here. There it is. There it is. 112.50, $150. We're up almost 1,000 on the day. 137.50. Let's go. Up 200. Let's go. Big dump. Oh, my shit's not even updating. My internet's slow. 225. Let's go. Up almost 1,000. I can flatten this or keep it open and hope for more of a dump. Made 7,000 from puts already. Hell yeah. I'm glad you guys are banking. Let's go. This is what we do. This is what we do, fam. Let's go. 220. Keep dumping. Let's go. Let's go. Let's go. We caught this shit live. Let's go. Keep going. If we can get down to that, and I'm playing with house money now, so I don't give a shit. This is not updating correctly. My Thinkorswim is slow. This is up. Okay, up $1,000. Let's go. Get down to that level. You guys saw that I called this live, so let's go, baby. There is likely a fair value gap or something here that can fuck us up, so I'm going to take profit here at 300. Woo! Picked up another 300. What'd I tell you guys? That's how you do it, man. That's how you do it. We will likely get down to this level. Fuck, if we dump all the way down just in one straight shot, that's all right. I mean, I probably left 5 points on the table. That's all right. Udamanzi, let's go. That's what I told you. And for those of you that are new, for those of you in the academy, tell the people that are new that this is what we do. Tell the people that are new that this is what we do. And for those of you that aren't in the academy, I don't know what to tell you. You would have made your entire year's membership in one day right here. What did I tell you? And if you want me to go over this right now, I will. But as I said, these right here, this is called equal lows. So where the dumb money will be like, double bottom. Yeah, double bottom. Try to double bottom that shit and see what happens to you. You try to double bottom that, your stop is going to get taken out. This is what we're expecting right here. You see equal lows. Don't think of double bottoms anymore. You think of them as equal lows. When you see this shit, this equal low shit, no, that's not a sign for you to go long. That is a sign for you to be suspicious that you are going to become the liquidity, because your stop is going to be somewhere down here and the market is going to push down and take your stop. So you want to be the person that is targeting that liquidity and not the person that is that liquidity. Hope that makes sense. That is the crux of our entire process, is making sure that you are not the liquidity. ICT, exactly. If you know, you know. Hell yeah. I am not Brendan. I admittedly am not a pure ICT trader. I break a lot of, no, I don't want to say I break a lot of rules. I incorporate a lot of ICT into my own strategy, if that makes sense. But I'm not a perfect ICT trader by any means. And no, I'm not going to be teaching, like, I'm not the person to go to teach ICT, right? Because with ICT strict strategy, I'm not the proper person to do that. Now, we have two analysts who are. I'm not that person. I like to incorporate ICT into my own strategy. I've been trading for 15 years. So I do, there are certain things that I'm comfortable with, but ICT definitely made them clearer for me. So being able to identify liquidity a lot easier, definitely I took that from ICT, as well as imbalances. I sucked at trading until I started to understand liquidity. Hell yeah. That's why we focus on it so goddamn much in the mastermind. Yo, Z, SPX are a beast when they're traded correctly. Close 500 contracts out of the money puts for $45,000. What? Valley Connect, bro. Was 375 down on the day, just made 225 back on that short. Hell yeah, made 1,500 in SPX puts. Man, you can call me fucking Oprah because I'm handing out checks today. Nathan, Z, you never miss, bro. I'm telling you, man, join the academy today. Kelly's a great guy to work with. Ty, appreciate that. Kelly's the man. Kelly's the man. See, that is the level I was targeting. I was happy with my profits, but that is the level I was targeting right there. So I left about 5 points on the table. But like I told you, I drew this level earlier. Go back and rewind the tape. You will see that I drew that level earlier. If you made money, give it a thumbs up. Give the stream a thumbs up. There's only 519 of you that like this. Give the stream a thumbs up, guys. What are you guys doing? Bad internet and all. I try to make you guys money. Yep, we're headed for there. By the way, I want you to see how many trades I took. So if you look at this, it will tell you I took 6 trades. Right? And I'm showing you my profit. As I said, FOMC, I personally trade less contracts than I normally do. That's perfectly fine. And there you go. These are all my shorts and these are my closeouts. And I closed the last one, as you can see here, at 44.66. And we are now at 44.65. No, I closed it at 44.68. Sorry. And I do think we're going to that 44.62 level, but no worries. Ricky says, how confident were you when you took that trade live? I'm super confident when I take trades, bro. Ask anybody on the chat. I always take trades live during these events. It's just when I'm scalping, I don't have, like, I will point out the levels that I'm taking a trade from, but when I'm scalping, I don't have the ability to be like, okay, enter at 44.80, blah, blah. Stop limit at blah, blah. It's so fast. Like, look how erratic this is, right? All my trades are right here on the chart. Maybe I can make this bigger. Hold on. Here are all my trades. I basically shorted the top since Powell started talking. And then I scalped close here. I scalped close here. I scalped close here. I shorted one more. And then I closed it at 44.68 down here. So I left about 3.5 points on the table. I don't even call that leaving it on the table. Hans Benz, appreciate you donating $20. Appreciate you. I'm from Brazil. And I really like your knowledge about the news. I'm learning a lot with you. Soon we'll be able to afford entry into your Discord group. Thanks. Appreciate you, man. Up another 400 to Tesla. What a scam on that earlier pump. I hope to see a bunch of these in the Trade Wins channel. Yes, me too, man. Me too. I hope to see a bunch of them in the Trade Wins channel. Oh, some people already started posting them. Z Live. Wow. He made 741. Got to trim most of my short trade while watching Z's fire short trade on the live stream. Hell yeah. I'm glad that you guys still watch me. Those of you that are in the academy. I'm glad you're not sick of me. $6,700, David. God damn, I made so many people so much money. $3K on the day. 45,000. I still can't believe that, Valley Connect. Holy shit. Clickster went from red to green. Somu 1,500 in SPX puts. Guys, I don't need to say it again. Use that damn code, FOMC. Get in the academy. Come learn this shit. This isn't rocket science. Like, I didn't tell you that we were getting down here just as a guess. This level was drawn out. Right? These relative equal lows were drawn out. Anyway, that was awesome. Once again, I'm truly sorry. Ashanti made another 400. Sonic Warrior says, thank you, Z. Can you explain fair market gap again? Idris, join the mastermind, bro. I'm going to go over it in detail. What was your major? Finance. That was my major. 3,080 says Silent Gainer. Holy shit, I'm going to have to save all this shit. Byron made 400. Fuck. Amazing. Once again, guys, I'm really, 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 really sorry for the mishaps. I hate subpar work. It makes my my blood boil. It makes my bones shiver. I really hate providing subpar work. So I apologize for the internet problems. I apologize for the continued slowness on the internet. I promise to try to resolve that. And you know how I'm going to resolve it? By finally going home at some point within the next week or so, where I'll be able to stream from my fast-ass internet. I do love traveling, but that is the one drawback I hate is a bad internet connection. However, we made money today. So, and it seems like I made fucking 100 of you money today. So, you know, not so bad, but I do want to extend an apology out to you guys because that's not my style, man. Like, what can I do? You know what I mean? 3K today finally was able to trade with you live. Good stuff. Accomplice X. Holy shit. Heather Davis. What's going on? Thank you so much for that. Ryan Fernando, $100, bro. Thank you. Your best half is way better than many other YouTubers. I appreciate you, Cricket World. Thank you. Do you still feel the Apple credit spread is working as you plan? Guys, like why enter a trade when there's a month left and it's near break even? Like, not every trade is going to work out exactly when you want it to. You know what I mean? Like, this is one of the more annoying things about sending alerts. I don't want to say annoying, like I'm grateful for everything, but this definitely is one of the, it will drive most people crazy. Is like right when you send out a trade, the next day people say, are you still in this trade? Yes, of course I'm still in the trade. If I'm not going to exit a swing trade because it's not 100% green the following day. And I want you guys to get out. If you are in that mindset, I want you guys to get out of that mindset. Like, let the trade play out. You have a month left. Now, if you're looking at the chart and you're like, oh, something fundamental happened and I no longer feel good about this, that's a different story. But if you're just in a trade and you're like wondering why it's not green, chill. I couldn't find that Apple trade in the Discord. It's right here, bro. And it's at the same price that it was back then. Opening up a call credit spread on Apple, expiring October 20th. It's right here. Look at the options alerts. Wow, a lot of activity in the Discord. I was with you guys all day, so I wasn't with them all day. I'm gonna have to go back and catch up on all this shit. I need a trading coach. G-Man, first link in the description. Sign up to the Mastermind. Mastermind 2.0 is coming out October 3rd, and you're gonna miss it if you don't sign up. By the way, if you guys are, what do you think of a 175 put on Apple right now? I don't like it. I generally don't buy single options. How much is the Mastermind program? Click the link. Click the link. Do you expect a liquidity grab and a rally in the last 30 minutes? I don't know. I'm not Nostradamus. That's not how it works. You don't expect a liquidity grab and then a rally. You expect, you're drawing out the liquidity levels and you're waiting to see if and when they get hit. Then when they get hit, you want to see how price reacts, because market structure market structure and imbalances and displacement are going to tell you likely whether the trend is going to continue down or whether it's going to grab liquidity for a run at the opposite side, which is up. But I can't tell you now what is going to happen. I can tell you where there is a liquidity zone, but I can't tell you what's going to happen. I hope that makes sense. All right. How much? I'm already part of the Discord. Oh, G-Man, if you're already part of the Discord, like if you're part of the monthly, you don't even have to apply to the mastermind. You will automatically get approved if you're already in the Discord. So make sure that you click the link. Just ask me if you're already in the Discord, G-Man, just ask me in the Discord. And I'm going to give you a different link because you're already approved if you're in the Discord. And if you're a lifetime member, then it's free. If you're a lifetime member, you get access to all masterminds, future and past. You get access to all of the recordings that we've ever done. Obviously, all of the live trading calls, but most importantly, all of the mastermind recordings that we've ever done. And you get access to all future masterminds. You can drop in and join at any time you want. So yeah. Could you do a few examples of liquidity grabs in your next mastermind? Not only that, we have an entire module on liquidity. All right, so yeah, you could likely scalp short, by the way, right here on the S&P 500. This is a super short scalp to get down to this liquidity level. Not my favorite play, but if you're already up and you're looking to go in for more, you could scalp short this level to get down here. I'm not in it, just in full disclosure, but it's right there. All right. Guys, make sure you hit that thumbs up so that other people find this stream even afterwards. Make sure you hit that thumbs up. All right, guys, if you want to be part of the Discord, again, use the code FOMC. That link is that code is going to expire after this. So make sure you use it. It's the first link in the description. It's the second link in the description. Mastermind 2.0 coming out October 3rd is the first link in the description. Get on the wait list. And yes, obviously, I'm going to go over exactly how I trade. How do I spot these levels? How did I just tell you to scalp right there? And we're going to get into futures. Even if you're a baseline beginner, we're going to get into option selling, how I do option selling for income. Like I told you, scalp that shit. Scalp that. There you go. You scalp this box, you end up here, you make money. Are the Academy Pro members already part of the mastermind? Only if you are a lifetime member. Are you still in Italy? Yes. Did they increase the hike or not? Oh my God, you are like way behind, bro. No, they paused. All right, guys. Once again, apologies. I will catch you guys. Hopefully the next live stream will be from my home. Apologies for that once again. Thank you guys for being patient and sticking with me. All the links that I just talked about are in the description. If you want to make money, you know where to find me. That scalp, bro. That was a scalp. What'd I tell you? Scalp here, take profit here. Did I not just tell you that? Did I not just tell you that? Easy money. Easy money. The way that we see the markets is like no other. If I humbly say so myself, easy money. Guys, put this to 600 likes. One more. I told you. That was it. That was an easy scalp right there. Now, we look to see whether this right here is going to turn into our liquidity level. And that's it. And let's see, we have 9:30. Oh shit, there's only half an hour in the market left. All right, I'm going to trade the last half an hour. Well, I probably won't. I already made my money today. And if you didn't make money, just remember this is not the only big day. There will be many, 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 many more. The market is waiting for you to learn how to trade it. Just remember that. The market is waiting for you to learn how to trade it. The market will always be there. And if the market is no longer there, then you have bigger problems on your hands. So do not get discouraged, guys. Don't get discouraged. Keep your head up. You will learn if you really want to. The market will be there for you. Anyway, I appreciate you. I love you. Stay safe out there, traders. Hit that thumbs up on your way out. All the links in the description. Use code FOMC, going to expire after this. Stay safe out there, traders. Peace.